Who's ready to listen to regulation for an hour? If everyone could just take a seat when they get a chance, and then I'll start. Okay, or don't take a seat. So again, my name's Aaron Kaplan, and I am the founder and co-CEO of a company called Promethium. I want to start out by giving a little bit of background about myself. So I'm a securities attorney, formerly at Gus Ray Kaplan Nussbaum in New York City on Wall Street. I focused my practice for the past 5 or 6 years on the applications of distributed ledger technology to the securities industry and the related regulatory issues. Got into the space in 2013, 2014, and at the time I wrote a no-action letter to the SEC asking them to allow us to transact virtual currency through a brokerage account compliantly under the federal securities laws. And at the time, MSBs didn't exist, money transmitter licensure really hadn't been applied yet, and there was just a lot of funny business when it came to virtual currency. And what you need to have in sort of the integration of the investor protections in order for that type of market to flourish. At the time, the SEC had no idea what virtual currency was. They couldn't even fathom what a blockchain was. So we got beg-bugged, meaning they just pushed the letter to the side. But from there, I was credited on the first legal token framework at the Harvard MIT conference, which basically formed the basis for how tokens were perceived from a regulated capacity in the United States. And then afterwards, I co-founded a company called Deckbound, which was a pioneer in the consumer digital asset space. From there, as time went on, I continued to focus on the industry. And when the Dow report came out in July 2017, realized this was my sweet spot and started Promethium, and we went from there. Now, let me give you a little bit of background about regulation in the United States. So there was a big question from 2015 to 2017. Were tokens utilities? Were tokens securities? That all ended in July 2017. And basically, the SEC said that depending on the facts and circumstances, tokens were securities. If you read between the lines, essentially what the SEC said, it was that all tokens were securities. And there's very rare application of a token where it's not a security. And from there, the chairman Clayton said that every token he's seen, the chairman of the SEC said every token he's seen is a security. The problem is that if every token he's seen was a security, the infrastructure didn't exist. So what ends up happening is now that regulation was upon us in July 2017, what ended up happening is then we had the crypto winter. And I would argue that the crypto winter came about because you had the distributed economy getting ahead of regulation. And you had a lack of token issuance standards, which led to poor projects getting funded. You had a lack of investor protections, which led to market manipulation, pump and dumps, and just a loss of integrity in the token market. You also had the SEC enforcement, which came down upon us and led to this bifurcation in the market. It had to, in the United States, it led to these private sales, these Reg D or SAFT offerings. And what that meant really was that these offerings were limited to accredited investors and the tokens couldn't trade freely in the secondary market, which if you think about it is contrary to the whole idea of tokens in the first place. Furthermore, as I mentioned, the bifurcation occurred where tokens had to choose whether to be compliant in the United States by issuing in a liquid security that couldn't trade freely on the secondary market, or they had to choose to operate outside the United States and either do it in a non-regulated environment or in a regulation that was compliant outside the United States. But basically what that meant is that token could never go back into the United States. And I would say that really in order for this industry to flourish, you have to have global liquidity and the ability for tokens to transcend jurisdictions. Now, the last part is that when the SEC said that tokens were securities, regulation was upon us. The problem was, though, is that there was no infrastructure. So there was no abilities for tokens to be compliantly issued, transacted, clear, settled, and custody in the United States. And what I would say is really necessary there, and what's really needed in order for us, this crypto winter to end, is a federal securities law compliant platform that incorporates the investor protections. And really what that would then allow is for the distributed economy to flourish. And really, that's what Promethium is doing. Promethium is creating the infrastructure that will allow tokens to be compliantly transacted as financial assets under the US federal securities laws, and also be utilized in the distributed economy and treated as their utility. So I guess we've got a little background now. Basically, what is Promethium? Promethium is creating the market infrastructure that leverages the blockchain to service the entire security token lifecycle. Our Ember token and our blockchain-enabled smart contract network form the underpinnings of really a complete ecosystem, a complete securities ecosystem that allows for the issuance of free trading tokens that are compliant and can be transacted across jurisdictions, has a secondary market alternative trading system, which is really the exchange component, where basically anyone, not just accredited investors, the retail public can participate in token offerings, they can buy and sell, and there will be liquidity. Third, we have mechanisms for clearance and settlement of transactions that occur on the Promethium network, security token transactions. And finally, we have the ability to maintain custody and control of customers' cryptographic assets. That's really the complete ecosystem here. And that's what I would argue is really needed for tokens to flourish. You need to be able to service the entire security token lifecycle from issuance to trading through clearance and settlement and custody. Now, there's been a lot of problems in the industry, and I will hopefully argue that problems create opportunities. But the first problem that we have in the United States is that there's no regulated market. As I mentioned, when the SEC declared that tokens were securities, the problem is where would these tokens be issued? Where would they trade? Where would they clear and settle? Where would they be custodied? That didn't exist. So basically, the SEC said tokens are securities, but now you have no place to do anything with those tokens. Now, the second problem, I would say, sorry, it's a little bright up here, is that we have no registered tokens. So from 2015 to 2017, there was a giant argument in the industry that tokens were utilities and therefore not subject to the federal securities laws. And then what happened is when the SEC said in July 2017 that tokens were securities, now tokens had to be issued compliantly under the federal securities laws. And what that led to was these private sales, a Reg D or SAFT, which are 506C general solicitation, but the issuance itself is limited to accredited investors, which means certain wealthy individuals and institutions, and they can't trade freely on the secondary market. If you had a registered security or a qualified security, whether under an Reg A plus or an S1, what you would have is a token that is available to all investors that can freely trade on the secondary market. The third problem, I would say, is that there were no investor protections. Essentially, historically, the token market was the Wild West, and people lost faith in it because people lost their money. It was pump and dumps, there was market manipulation, and there was really no integrity to the market. And what we need is the institution and of these investor protections in order for the token market to have integrity and for it to flourish. Finally, as I mentioned before, there was no infrastructure. So tokens could be issued, but there's nothing you could do. Their tokens could exist, but there was nothing you could do with it. So what's really necessary is for this compliant infrastructure to exist that will allow tokens to be issued compliantly under federal securities laws, most likely under Reg A+, transacted on the secondary market under an alternative trading system, which is an SEC and FINRA registered forum for secondary market activity. It's the equivalent of an exchange. You need mechanisms for clearance and settlement and maintaining custody of customers' cryptographic assets. So, as I just said, what is Promethium? Promethium is this complete solution. We allow for the issuance of free trading securities that are then listed on our secondary market ATS, on our exchange. You can't call it an exchange in the United States, but basically it's the equivalent. And then finally, you need a clearing license on the back end, where that could be where you can monitor and process token transactions and maintain custody of customers' cryptographic assets. And this is what's really necessary in order for this distributed economy to flourish, because you need to be able to service the entire life cycle. What you'll see is that some people want to do disparate solutions. We have an issuance component, we'll have a secondary market component, but what are you going to do? I mean, certain people, they have a token that's available to accredited investors, but they have nothing else to list there. So what's going to happen? Basically, you need to have this complete ecosystem. So what are the advantages we have? SEC and FINRA registered ATS. So basically, as Promethium went through the registration process, is going through, and hopefully will be the first retail ATS, meaning the entire general public can participate in secondary market trading of tokenized securitized tokens. And basically, our ATS is regulated in the US and ensures investor protection, issuer accountability, which is definitely necessary. I mean, we had such issues with issuers not fairly disclosing it, not fully disclosing everything they had to, and basically manipulating the market. And by introducing these SEC and FINRA registered investor protections, what you'll be doing is reintroducing market integrity into the ecosystem, into the token market. The second advantage of what Promethium has is we have SEC qualified tokens. Now, what does that mean? When you do a Reg A plus offering, and any sort of public offering in the United States, the SEC either has to qualify or register those securities. And it's a bit of a process. It takes 4 to 6 months. But what that means is it basically opens up all the possibilities to you, because what you allow for is tokens that are available to all investors and free trading on the secondary market once listed on an ATS. And I would argue that that's the holy grail that's necessary in order for the token economy to flourish. The third advantage is liquidity. Now, if you look what's happened historically, Reg D tokens, SAF tokens, are illiquid. They're not available to the general public, and they can't trade freely on the secondary market. There's a lot of interest in the industry when it comes to private share markets, but private share markets are just VC markets. They're basically markets that are meant for wealthy individuals to transact securities amongst themselves, and they're illiquid, and there's giant spreads. Now, what you need is basically our equity-based electronic market and trading platform, which employs a maker-taker liquidity model that will attract both retail investors and active traders. And that's how you'll really get depth to a market and real liquidity. And you won't have it until it happens. And that's what Promethium's doing. Now, our fourth advantage is streamlined clearance and settlement and custody. So basically, we use the blockchain as the foundation for our whole ecosystem, which creates efficiencies, eliminates redundancies, and points of failure from the clearance and settlement and custody process. And if you look what's happened in the brokerage industry, in the financial service industry since the 1920s, you have a lot of different technologies being piled on each other. And what that's led to is really inefficiencies, cost redundancies, and basically made the process slow. By using our distributed ledger technology and integrate it into the process, you eliminate all that. And you streamline the process and you incorporate cost savings. Now, beyond the advantages discussed here, how do the participants in the ecosystem actually benefit from what Promethium is proposing, this complete solution? Well, let's look at it from an investor standpoint. Investors will benefit from full disclosure under the federal securities laws when it comes to the issuances they're investing in. That means issuers will be required to disclose all material facts, anything, and the definition of material facts is an SEC definition, meaning anything an investor would consider material when making an investment decision. So it's basically anything important. And what that will allow is them to make a fully informed decision whether to invest in a token or not. And historically, there wasn't these standards, and these sort of either illegal tokens or manipulated tokens led to investors losing a lot of money. So that's by introducing the investor protections and the full disclosure requirements under the federal securities laws, what you really do is an advantage to investors who historically have caught the short end of the stick here. The second component to that is traders. Historically, as I mentioned before, there was market manipulation, pump and dumps, and really no integrity in the token market. But when you do it, when you actually introduce a market that's compliant under the federal securities laws, you introduce the integrity in the market and fair and orderly markets, and traders will benefit from that. And what we need is there to be active traders, not just people who are investing in tokens or utilizing them on a blockchain, people who are actually buying and selling them for a living, because that helps create that market liquidity. Now, finally, the third part is issuers. How will issuers benefit from what we're proposing? Well, issuers will benefit because essentially they'll have a framework by which they can compliantly issue tokens that are free trading and available to all investors, and that basically can be listed on the secondary market. And that eliminates the illiquidity there and basically will allow the distributed economy to flourish. So how does it work? Well, this is how it works. A little bit confusing. And this is how the Promethium ecosystem works. First, we have investors and traders. Oh. Now, up here you have a new retail investor or trader, or an existing Promethium network investor or trader. And what an investor or trader will do is they'll open up a brokerage account. And when they open up a brokerage account, they'll create their own digital wallet. They won't know it. Investors shouldn't know it. People who are operating in the blockchain space don't need to know they're using a blockchain. They just need to take advantages of the benefits from it. And when the new retail investor opens an account, they'll go through an automated KYC and AML process, fund their account, and then basically either invest in an initial issuance of a new token offering under Reg A+, or second, they'll go buy and sell or trade tokens on the secondary market on our exchange component, where basically it'll be an open market for people to participate in secondary market transactions for tokens. Next, let's look at our issuance platform. So on the issuance side, you have a potential issuer, and they basically want to offer a token compliantly under the federal securities and laws in the United States. They fill out a Reg A+ offering, and they get it qualified by the SEC, which is not, it's weird because qualified essentially is tacit approval of the offering. When the SEC gives its tacit approval, its qualification, that token becomes free trading and available to all investors. And again, that's super important for this economy to flourish. Finally, Promethium's ATS. So you have this issuer component here. And when the issuer goes through the qualification process, they raise funds. It's then the Reg A+ offering goes live, and it then is listed on Promethium's ATS, where it trades freely on the secondary market and is available to all participants, traders, active investors. And as I mentioned before, by employing a maker-taker model, which essentially gives a rebate to makers of liquidity and charges takers of liquidity, it's an attractive model to both retail investors and active traders, which will lead to liquidity in the market. So let's take a look at our issuance model. Promethium uses Reg A+ to issue securities that are free trading and available on the secondary market. I've said it like 15 times now. But what Reg A+ was a new regulation adopted under the Jobs Act in 2015 that allows the issuer to raise up to $50 million annually from the general public, and all investors can invest. It's not a Reg D, it's not a SAF, which is limited to accredited investors and institutions, and with those securities being free trading, they have no restrictions, meaning they're liquid. And companies can also advertise a Reg A+. So we've mentioned before Reg D. Reg D 506B meant you had to have an existing relationship with an accredited investor, and you couldn't generally solicit. But under the Jobs Act, by using Reg A+, you can solicit the general public, meaning you could advertise your offering, let people know about it, and attract investors by giving them, obviously, proper information. Furthermore, the Reg A+ model, and I'll go into this a little further afterwards, is reduced costs. It's a streamlined process by which a company can go public. It's called a mini IPO, or an IPO light, and it's really meant as a mechanism for companies that aren't ready for a full S1 registration statement to get public market liquidity by issuing a security that is available to all investors and free trading on the secondary market. Now, how is Promethium going to list companies on its ATS? Where are we going to get companies from? A ATS, meaning an exchange, an alternative trading system, which is the equivalent of an exchange, needs an issuer pipeline. You need product by which to list on your platform. Someone before had mentioned T0. T0 has no product. They have their own token which trades on their platform. Okay, but you need different product, and Promethium has a wonderful issuer pipeline. As I'll explain a little bit later, the first component to our issuer pipeline is the entire decentralized economy. All US and Canadian companies looking to issue a token to raise capital compliantly in the United States will access Promethium's platform by which to issue their compliant securities and then list them on our ATS. And if you think about it, everyone's trying to do that. It just doesn't exist in the United States. And we anticipate being the first platform that is regulated, compliant under the federal securities laws, and anybody who wants to access this decentralized economy will use Promethium's platform. The second part of our issuer pipeline, oh, there we go, is Wangzhang-related entities. Promethium's lead investor and technical co-founder is a company called Wangzhang Shanghai Blockchain, which is probably the largest and most capable blockchain company in the world. And they've invested in a multitude of companies that are part of their network that they anticipate listing on the Promethium platform to do an issuance and then to list on our secondary market. And what's wonderful there is that the quality of their projects is immaculate. It's a wonderful product pipeline. Finally, and this is a super important one, Reg D and SAFT issuers. Now, if a company issued a Reg D or SAFT, they issued in a liquid token in the United States. They could raise as much money as they want, but those tokens are going to need public market liquidity in order to be utilized on a blockchain and have real purpose. And what they would do is do a follow-on Reg A plus offering, which would then allow them to have public market liquidity, and they can either have the Reg D or SAFT tokens, if they've been held for 6 months, trade under Rule 144, which allows an issuer, which allows a holder of those securities to trade 1% of the issued and outstanding of the float every 3 months into the public market. Or after a year, if you've held your Reg D or SAFT, a liquid token, for a year, and then there's a follow-on Reg A plus offering, what happens then is the legend, the restriction on those Reg D tokens is removed, and they could trade freely into the public market. So basically, the third component of our issuer pipeline is any issuer in the United States or the world that did a compliant Reg D or Reg S, and then wants to have public market liquidity by doing a follow-on Reg A plus, by which they could then trade those restricted securities, those Reg D or SAFT securities, into the public market. So I think it's really important. Why would people do what we call a smart securities offering as opposed to an IPO? Why? I mean, it's not as big of a market. There's other sort of difficulties there. But the reality is that offering a smart securities tokens are significantly less expensive and time-consuming relative to IPOs. So the total range of cost to do a smart securities offering on the Promethium network is somewhere between $200,000 and $700,000, and the total time it will take from inception to offering to being listed is under a year. And if you compare that to what happens in an initial public offering, in an initial public offering, it can take years, and it costs millions of dollars in both pre- and post-IPO expenses. So the total cost of an IPO ranges from $5 million to $75 million, and the time it takes to do an IPO is up to 3 years. It's a much slower process. And any sort of company within the distributed economy, they don't have 3 years. They'll have their blockchain done by then. They'll have to have their tokens be able to be utilized on their blockchain. So it makes a lot more sense for them to do a much quicker and less expensive offering, this smart securities offering, as opposed to an initial public offering. So here's a couple other features of a smart securities offering, and I'll go through it pretty quickly. The legal fees attended to this offering are $50,000 to $200,000. The offering fees range from $100,000 to $300,000. Obviously, there's going to be accounting and consulting costs, and there might be ongoing fees per quarter. But the reality is that all these expenses are much higher when it comes to initial public offerings. So for a young company or an established company in the distributed economy who wants public market liquidity, it makes a lot more sense to do a smart securities offering as opposed to an initial public offering. Now, the specifics of the fee structure for the initial public offering, as you can see here, legal fees. No one likes to pay their lawyer. I'm an attorney. No one enjoys it. And basically, the fees attendant just on the legal side are $1.5 to $3 million. That's a lot of money. Second, underwriters' fees. They'll range from $3 million to $50 million. It's expensive, and it's a large portion of your capital raise. Next, obviously, you're going to have accounting, auditing, consulting fees. That's just part of the deal here. But those are high too. And you have registration fees, listing fees, all these other fees. And what, again, essentially the point here is that the fees attending to doing a smart securities offering under a Reg A plus are much reduced across the board as opposed to doing an initial public offering. Furthermore, people say, well, I can only raise $50 million annually under Reg A plus. That's true, but you can raise it annually. So if it takes you 1 to 3 years, let's say 2 years to do a public offering, and the average size of the public offering raise is $100 million, it's the same thing as doing 2 Reg A pluses over the course of 2 years. It makes sense, and basically it's much less expensive. Now, what is Prometheum? This is a picture of Promethium's alternative trading system and our basically electronic market and trading platform. And this will be the secondary market. And what we've done is basically incorporate the equity structure into the token model, which basically ensures market integrity, issuer accountability, and basically ensures no funny business. You're operating your secondary market compliantly under the federal securities laws. Over the course of decades, generations, the federal securities laws have evolved to ensure that and prevent market manipulation and ensure fair and orderly markets. And I believe they set a perfect precedent and a perfect structure by which you can compliantly transact tokens on a secondary market while ensuring the integrity of those markets. And that's super important. So the third element within our ecosystem, if you look at it, we have the issuance. Second, we have trading. Third, we have clearance and settlement custody. All that sits on top of our blockchain, is empowered by our Ember token. But when you do a comparison of traditional clearing to Promethium clearing, what you really see is that you have in traditional clearing, you have a back office processes. The processing of securities transaction is slow, cost expensive, redundant, because as I mentioned, it's an amalgamation of different technologies that have been piled on each other since the 1920s. And that's just not a good idea, and that could all be disrupted by distributed ledger, using a distributed ledger technology for clearance and settlement purposes. So in the United States, clearing and settlement and custody in the current market structure takes 3 days. It's complicated, it's expensive, and there's manual processes there, which is crazy considering the generation we live in, the tech we have. So furthermore, on the Promethium side, is by using a blockchain, we can clear, settle, and custody trades intraday, same-day settlement, and back office processes are coordinated, and smart contracts are allowed for automation and reducing the cost of overhead. On the traditional clearing side, clearing firms are sort of stuck in the Stone Age. It's an old process, and they still use actual manual manpower for record keeping. And there's hundreds of people involved in the process. It's slow, it takes 3 days, and there's still mistakes on the reconciliation between trades and clearing transactions because there's human beings involved. Now, if you look at on the Promethium side, by writing everything to our blockchain, reconciliation and record keeping became automated processes. Now, how does that work? Well, if you think about it, a token issued on the Promethium blockchain will be listed in our ATS. Transactions, it's a secondary market. Transactions that are executed on our ATS are written to our blockchain. And furthermore, settlement transactions are then written to our blockchain where reconciliation can occur between the ATS blockchain activity and the clearing blockchain activity to basically ensure that everything's done properly. Second, the full process can be completed intraday. It's much faster, and that's a definite advantage here. And also includes has significantly less resources needed from a human standpoint. It's automated. And obviously, we all know the benefits of distributed ledger technology for record keeping and immutability, so that makes total sense. And because of this, basically, we eliminate the back office redundancies. We're streamlined and less expensive. So how does the Promethium blockchain work? So the Promethium blockchain is really 2 blockchains. We have our core blockchain, which is our regulated blockchain, which is where the issuance, the trading, and the clearance and settlement and custody occurs. And that's all within a regulated environment over Promethium's permission blockchain. Both of our blockchains are actually based off a derivative of Ethereum called BCOS. And what happens now? I have a security, but what I want to take this token out and I want to use it on a different blockchain. I want to use it in the decentralized economy. Well, what happens then is you'll take your token from our core blockchain, our regulated blockchain, and move it to our utility chain, which is basically mechanisms for dApps, creators, and user network participants to interact freely, where they can deploy smart contracts and create the integrations to use those tokens within the decentralized economy. And if you think about it, this is what's necessary in order for this whole ecosystem, not just the Promethium ecosystem, but the entire distributed economy to flourish. You have to have the ability to treat a token compliantly as a capital asset, as an asset under the federal securities laws, but also allow it to be utilized within the distributed economy. And Promethium creates that bridge that will allow tokens to be transacted compliantly under the federal securities laws and then utilized within the decentralized economy. So, basically, obviously, there's a tokenized network details. So we use what's called a smart securities token. A smart securities token is interesting because it allows you to customize it and allow the token to both have investment features and to have it be utilized in a blockchain outside of the Promethium universe. Promethium uses its own token, which is our Ember token, which is basically the fuel for the entire network. And finally, the Ember token, when you look at it, has both proprietary payment currency components and work access components, which I'll go into a little bit more. But when you look at the benefits here, you can implement a token in smart contracts and deploy it to the Promethium blockchain. We have a wallet structures that allow for tokens to be used freely and tradable, to be used as a freely tradable security or utility access payment token as required. Ember has both network protocol participation and business ecosystem participation rights. And what that basically means is that when you look at the Ember token, right, the work access component of the Ember token, there's really two sets of rights attendant to that. You have with this network protocol participation rights, which allows holders of the token to provide service for revenues on the protocol level. Next, after that, you have this business ecosystem participation rights. And these sets of rights basically allow participants to provide services at the application level within the distributed business ecosystem. And if you look at the different services and revenue streams attendant to this universe, these sets of rights both have value, have utility in their profit-making value. So, as I mentioned before, Ember token has work access features, and the work access features will be introduced as time goes on. The idea here is that the token economics has moved beyond tokens as a proprietary payment currency. That's old school token 1.0. There's really nothing super interesting about that anymore. When you have a work access component to your token, basically the right to certain revenue streams attendant to the services provided on your network, what happens there is that the valuation of the token changes because you value it not on the actual currency value. What you value it on is on a multiple based off the potential revenue streams that are generated from tokens. And what you'll see more and more is you'll see these work access tokens. And what's really interesting, in order to get access to this work, we have a market bidding system where people will make bids to stake their tokens by which to provide those services. And what will end up happening is as more activity occurs on the Promethium blockchain, more tokens are issued, more trades occur. The different revenue streams attendant to the different parts of the ecosystem should increase the bidding for those revenues, which will increase demand because people will have to stake more to get access to those revenues. So initially when Promethium launches, we intend to have a couple basic work access component. One is validation. So we have a proof of stake system, and what that means is that obviously you have to stake tokens to do validation on the network. Everyone's familiar with it. It's meant to ensure good behavior, to ensure that people are penalized if they don't act as they're supposed to within that ecosystem. And beyond that, we'll have transaction liquidity providers that will allow tokens to be paid for outside of the Promethium network, to be paid for in that issuer's third-party token on that blockchain, and then to be converted back into our blockchain in a liquid and seamless manner. So, what are our competitors? Well, it's interesting because I would say that Promethium's competitors are focused on private share markets and disparate parts of the ecosystem, whereas Promethium is a complete solution. And as I mentioned before, a complete solution is really needed. On New York Stock Exchange, NASDAQ, with the DTCC and NSCC on the backside for the issuance, trading, clearance, and settlement and custody of these tokens in order for the distributed economy to flourish. Now, when I look at Promethium's advantages, I would say there's 5 main ones. One, we're a complete ecosystem. I just mentioned that. Second, our intellectual capital. So Promethium was incubated out of a Wall Street-based law firm called Gus Ray Kaplan. And when you look at how the expertise you have to have here, it's really the intersection between securities law, the brokerage industry, and distributed ledger technology. And really, the 2 biggest costs here are going to be your legal costs and your tech costs. I'll explain the tech costs in a second, but from a legal cost perspective, we basically have partners with a established premier Wall Street securities law firm that deals with molecular securities issues. And that basically eliminates our legal costs, and which is one of the 2 greatest costs there. The third advantage is on the tech side. Promethium's lead investor and technical co-founder is Shanghai Wanzheng Blockchain. And basically, we have 50-plus blockchain engineers working on the Promethium project. Shanghai Wanzheng Blockchain is considered the preeminent force when it comes to blockchain engineering talent in the world, and they're really our partner. They're not a third-party service provider. They're a co-founder of this company. Their vice chairman, Dr. Shao, sits on our board, and we work with them hand in hand. And with their expertise, we've been able to rock and roll. And we're going to be demoing for FINRA, we anticipate, next month of our ATS and our blockchain, which we hope will then lead to a quick approval and being live before the end of the year. The fourth advantage here is we're retail-based. Everyone else is doing these private share markets, and there was discussion before about people transacting tokens through these illiquid private share markets. It's interesting, it's a bit gimmicky. What's the point? Like, private share markets aren't necessarily interesting. They're just a mechanism by which accredited investors and institutions can transact with each other. They can do that over the counter now. What you really need is this retail market participation in order to establish the depth of the market, the liquidity, basically this New York Stock Exchange NASDAQ model, where basically you'll have active traders, investors, different participants being able to freely participate compliantly under the federal securities laws. Now, the fifth advantage, and I'm lucky I remember them all, is actually that we're blockchain native. So what we do is we incorporate the actual benefits of distributed ledger technology into the Promethium ecosystem to streamline the process, reduce costs, have an immutable record, and all the other benefits of distributed ledger technology. And I would argue that you need this in order to create the 21st century financial ecosystem. And if you're transacting tokens by using old database models, it's definitely viable from a sense that it could be done, but it really doesn't create this 21st century financial ecosystem, which by using our own permission blockchain and our utility chain, basically Promethium incorporates the benefits of distributed ledger technology to become this 21st century financial ecosystem. So our timeline, and this is a little bit of a history about ourselves. So as I mentioned earlier, in April 2014, Gus Ray Kaplan and myself at the law firm submitted our no action letter to the SEC. At the time, we wanted to have virtual currency transacted compliantly under the federal securities laws to introduce the investor protections and market integrity. They had no idea what was going on. They've since then learned a lot. The SEC knows what's going on with distributed ledger technology. They have crypto czar Valerie Shevnik. There's the crypto mom, Heather Pierce. Basically, they know what's up, and they're waiting. It's not a question of if something will be approved. It's a question of when now. After the SEC said that tokens were securities in July 2017, basically what that meant is, and that they didn't want to kill innovation, basically what that meant is that someone's going to be approved. And we anticipate being the first approved to be a real retail-based ecosystem for tokens. So then in January 2015, myself and our CTO actually met at this conference. And you'll see a picture of Gareth later. He looks like a Viking. And basically, this was the first legal framework for tokens, and we were both credited on that paper. Since then, basically, we had tons of experience in the space. We advised the first rescission of an ICO. If you remember that when tokens were issued improperly, basically unregulated tokens, the only way to really cure that regulatory defect is to offer a rescission, which offers investors the ability to get a refund, should they want it, of the money they invested in that illegal or improper offering. And we really advised the first one in that space. In May 2017, we really had the vision here. So what happened from 2015 to 2017 is you had this unregulated market, this utility token myth. And in the United States, I know it might be different here, in the United States there's no such thing as a utility token. Basically, the only example that Chairman Clayton said where there might be a utility token is the equivalent of a token used at a laundromat. Anytime a token appreciates or decreases in value, there's a speculative component. Why would people be involved with that except that they were going to make money? And obviously, the standards under the Howey test is an investment in money in a common enterprise with the expectation of profit primarily from the efforts of others. That's basically any speculative investment when it comes to a token, unless it's fixed. And what happened there is that you should start to see as SEC enforcement came in and there was more and more talk of regulation that this is the way that what Promethium was creating was necessary in order for the distributed economy to flourish. So we leveraged our regulatory expertise, and in October 2017, we formed the company and filed the first public Reg A plus offering in the United States. Basically, that would hopefully serve as the precedent by which other issues will follow to issue compliant tokens that are available to all investors, not just accredited investors, and can freely trade on the secondary market. Furthermore, in, I believe, October 2017, we also filed another no-action letter with the SEC, and what that was basically laying out was the mechanisms by which you can clear and settle and custody tokens compliantly under the federal securities laws through a clearing firm in the United States. Now, in November 2017, as I mentioned, we filed our Reg A+, and basically, again, what we're trying to do here is establish the Holy Grail, the free trading token available to all investors in the United States. Now, from June to October 2018, we filed our ATS, which is our secondary market alternative trading system, and we filed with FINRA, and we established our partnerships with Mannerhaven, a FINRA-registered introducing broker-dealer that will handle the issuance component to our ecosystem. In November 2018, this is a really important one, we established our major partners, and without our major partners, we would just be another company that really had good ideas but couldn't implement them. Our major partners included a $12 million investment from HashKey and the technology partnership with Wangzhang Group. And basically, with our powers combined, if anyone's seen Captain Planet, what we're able to do is really have the securities expertise, the blockchain expertise, and the regulatory expertise, and really accomplish our business plan. Finally, in March 2019, we've been ready and we've released our internal beta. And as I mentioned before, by showing you the picture of the trading system, we're anticipating demoing for FINRA in the next month. FINRA is the self-regulatory organization in the United States necessary to get approval from before you can become an alternative trading system. And once that's done, we really anticipate being able to get our approval and going live by the end of 2019, which will then really take tokens from this asset that's limited to a few and introduce it to the general public and really allow this Internet 3.0, this Internet of value to flourish. So why are we capable of doing this? Well, as I sort of mentioned before, Promethium's team are experts at the intersection between securities regulation, the brokerage industry, and the distributed ledger technology. I myself, since 2013, have focused my practice on the application of distributed ledger technology to the securities industry and the related regulatory issues. Our team has extensive experience in this space. The most important parts here, obviously, this is not just a tech project, this is legal tech. And basically, through our relationship with Gus Ray Kaplan, who continues to provide ongoing support beyond incubating us, we have 50 years combined legal securities experience, 20 plus years combined experience in blockchain. Our CTO Gareth here, as you can tell, he does look like a Viking. Essentially, he was a pioneer when it came to the use of digital assets in the consumer space. As anyone who was in the consumer space in 2014, 2015 knew from a blockchain standpoint, blockchain just got too expensive. As the price of Ethereum and Bitcoin rose, essentially what happened was it just became too expensive to transact consumer assets continuously over those blockchains. But it was an excellent experience that we built from there. Alex, our CSO, has had extensive experience building multiple ATSs, alternative trading systems, and basically beyond our partnership here, as I mentioned before, Shanghai Wanzhang Blockchain is our co-founder. They're not a partner, they're our co-founder. We work hand in hand with them. And leveraging their excellent resource and expertise, we really feel that we can achieve our business plan in an efficient and intelligent manner. Beyond that, we've established strategic partnerships along the way. Hashkey Digital Asset Group, an affiliate of Wanzhang, led the investment for $12 million. Gus Wright Kaplan, as I mentioned, was our securities law firm, which I used to work at, which incubated our company and continues to provide ongoing support. And if you look at the relationship between Shanghai Wanzhang Blockchain, which basically eliminates our tech cost, and the Gus Wright Kaplan, which eliminates our legal cost, essentially what we're able to do is eliminate the two largest costs attendant to operating this business and achieving our business plan. Furthermore, we have the relationship with Manor Haven as our introducing broker-dealer, and Stockcross Financial Services as our clearing firm. And this all together means we have everything ready to accomplish our business plan, from the issuance component with Manor Haven, to the ATS, which we hope to get approved real soon by FINRA and the SEC, to the clearance and settlement and custody component on the back end with the clearing firm Stockcross. And unless you have all these components in place, you really can't complete this ecosystem, but we have them all in place such that when we get our regulatory approval, we'll be ready to go live. That's basically it. I would like to say that it's really important to understand that we don't have to wait for new regulations and new rules to be adopted. In the United States, that's slow. It just won't happen. The industry will pass you by. What's really important here, and I hope that I've explained, is that there are compliant mechanisms which we're operating under by which to issue, transact, and process token securities or securitized tokens compliantly under the federal securities laws, and that's what we're doing. And hopefully our New York Stock Exchange NASDAQ model for tokens will be live before the end of 2019. Thank you very much for your time, everyone, and if there's any questions, I'm happy to take them.
I was wondering why the others, you consider 2, 3 of them, similarly equal to you to say that they're offering complete services. What do you mean by complete total when they have got missing link there?
In a slide like that, you want to be fair, right? I will say that I'm confident that we offer the most complete solution. If you look at someone like a Coinbase or someone like a Circle, essentially they have parts of the ecosystem. Circle bought Seed Invest, and they basically are going to potentially try to do a secondary market. But again, that's a potential complete solution. Ours is a complete solution from an issuance component to a secondary market trading component to clearance and settlement custody, all on top of our own blockchain, which we really believe will be the 21st century financial ecosystem.
Aaron, congratulations on being hopefully the first.
Thank
you. You must be very pleased. Can you maybe talk a little bit about sort of more traditional players like ICE, for example, that started Bakkt, and how does that play into what you're already doing? Do you see them as a competitor at all?
So ICE and Bakkt, I believe, are doing a futures exchange. They raised a lot of money, but futures are different than securitized tokens. Futures are a different component here. Maybe it's virtual currency futures. That's sort of a different part from what we're doing. There's a bifurcation in the United States when it comes to regulation, first of tokens, which is under the federal securities laws, and futures, which is CFTC stuff, Commodity Future Trading Commission. So could they potentially be a competitor in the future? Sure. I mean, they're supported by ICE. They're big time. But at the same time, we've got not just a head start. We've finished a good percentage of the marathon before them. And if they want to transition to do what we're doing, they're going to have to go through the approval process just like we've been going through. And that'll take time. And my belief is that beyond being first to market and taking the most market share, I mentioned, I believe we have the most complete solution. We have dealt with the regulatory issues along the whole security token lifecycle. And while they might be competition, we'll have a head start. But furthermore, it's great. There's not just one exchange in the United States. There's lots of exchanges. And in order to get real liquidity, real depth of market, it's great if there's lots of public exchanges. A lot of people have done these private security markets, these accredited exchanges. I would argue that's not an exchange at all. That's just basically a forum where wealthy individuals and institutions can transact illiquid tokens that have giant spreads. What we're doing is a generation ahead of that, meaning a retail-based platform that's available to all investors. That's how you'll have real public market liquidity. That's how you'll create a New York Stock Exchange, NASDAQ for tokens, and really allow tokens and the decentralized economy or distributed economy to flourish, to be treated compliantly as financial assets under the federal securities laws, and to be utilized in the distributed economy on different blockchains.
So what sort of criteria do companies have to meet before they can do Reg A plus offering on Promethium platform?
Sure. So obviously, it's super important to us that the tokens that we offer on our platform are viable for companies that have legitimate business models and business plans and operations. First, when someone wants to do a Reg A plus offering, they'll go through a due diligence process. It's not expensive necessarily, but it's a lot of effort because you're going to have to give us, basically, you're going to have to show us everything. And we're going to have to evaluate it from that standpoint. Second, like any other public offering in the United States, you need audited financials and anything else attendant to that, but that's just required any time you do a securities offering there, a public securities offering there. So, again, any company that has a legitimate business, hopefully has operations, and basically wants to list their security token such that it's compliant and freely trading on the secondary market in the United States, particularly if they've done a Reg D or SAF token, which already means they're a security. They need to do a follow-on offering to get that public market liquidity, and we'll basically provide the forum by which they can do it. One of the things that's super important here is that it's really important that we have these qualifications in order to even do an issuance on our platform. Because what these qualifications require is the incorporation of the investor protection rules and the full disclosure requirements under the federal securities laws. And by incorporating the investor protections and the full disclosure requirements, basically you're introducing integrity into the market and hopefully eliminating any sort of manipulative practices, pump and dumps, or basically preventing, hopefully, poor tokens from getting funded. As I mentioned before, we believe we have a really strong issuer pipeline, whether that's the LongHash-related companies or companies that have done a Reg D or SAF token offering that are looking for public market liquidity, or any other token in the United States, or excuse me, any other token in the world that wants to be compliant in the United States, have a free trading security and access the US capital markets compliantly under the federal securities laws.
I think specifically what I'm asking is, say for example, if you want to be listed on NASDAQ, you have like certain 4 different standards you have to go through, right? Either you have to have certain amount of like revenue, you have to have show certain records of cash flow, or you have to be able to raise, capitalize your equity to a certain threshold. So what I'm trying to ask is for Reg A plus, are there this sort of like hard criteria? No.
No, that's basically, Reg A plus is a regulation by which you can compliantly issue tokens available to all investors that are free trading on the secondary market. And S1 is the same thing. The actual listing requirements are on the NASDAQ side. They're on the New York Stock Exchange side. And basically, in the beginning, we'll work with issuers to ensure that they have these basic operations and are compliant before they are listed on our platforms. But the barriers to entry, like you mentioned on the NASDAQ side, that's not there for us.
Thank you.
Thanks. I would agree with this lady. Very impressive.
Thank you.
my very quick question is, I'm wondering whether you're planning, given your platform, whether you're planning to introduce a product yourself. For example, to get the liquidity going, to get interest, the Bloomberg Galaxy Digital Index, which is the top 10 coins, Does that sort of make sense? Maybe I'm just using that as example, or whether you have some ideas for your own products, in the sense that I've been watching Binance, and they have this thing called the Launchpad, where they vet incoming companies. They do a lot of vetting. So while they're not licensed, the three I think they did
But
three.
did you say they do Reg A?
They did three STOs or ICOs. I don't know what they were, but I believe they sold out very fast because Binance themselves, and given the fact that you said you're fully compliant, you've done tremendous work, you have almost a great brand name by then, that you can use yourself like a launchpad. That's one question. Second is, given that you said you have a tech investor, I didn't quite catch the name, I can't pronounce it. Yeah.
They're the biggest blockchain company in the world.
Is that platform compatible with ERC20 tokens? For example, something that's a token offering outside the US decides to later come to the US, can list on your platform as let's say, Ethereum compliant token?
Sure. So from an ERC20 perspective, Promethium's blockchain is a Ethereum-derived technology called PBFT, and basically that has the cross-compatibility because it's Ethereum-derived. When it comes to your initial questions about, what was it? The index. Sure. So basically, from a distribution standpoint, when it comes to Binance, Binance has an inherent investor pool, and we have that as well in the sense that we've established partnerships with the brokerage industry in the United States that will allow their accounts, their existing accounts, to invest directly from their accounts into our platform. Whether that's from the issuance side, like what Binance has when they're doing those token offerings quickly, or on the secondary market trading side. So basically, through establishing the relationships that I mentioned before within the brokerage space, we're basically establishing the distribution beyond the product pipeline channel. We're establishing the distribution channel to ensure that our tokens that are offered, that are compliant and have passed the due diligence process, will get funded, and then basically we'll have the active investors and active traders who will participate on the secondary market there.
Actually, I have kind of, I'm sorry, why I talked about the index product is, it's kind of strange that an index product would go through a licensing, because it's, again, I come back to the word synthetic. I don't know what kind of problem SEC has with that, because it's just a derivative of something trading on another exchange, and you're getting a price feed. So that's a bit confusing to me, because these products seem like very interesting to the retail investor. Because the retail investor may say, hey, I'm not going to spend time trying to analyze 4 or 5 different companies, but I'll put my money into something that replicates the entire index. Just a thought, and I don't know what problem the SEC has with these synthetic products that derive their value from something already existing.
Like Bitcoin ETFs, is that what you're referring to?
No, really not actually. In fact, Bitcoin is anyways from 50 to, it's been dropping from 90% of the market down. Eventually, I think in the next few years, it'll come down. So I think the Bloomberg Galaxy Digital Index is something more what I'm referring to.
So when it comes to
that's Bloomberg doing it.
No, definitely, and Bloomberg's a market leader. But when it comes to index products for the underlying tokens or the underlying currencies, are those tokens properly registered? Are those tokens basically compliant under the federal securities laws in the United States? That's what I think the SEC has a problem with. The question is, how are those tokens designated that form the index? You can't really, in law, there's a concept of a fruit of a poisonous tree. When something is inherently wrong to begin with, something that comes out of it can't be right, because it's already poisoned. So I don't know if that's exactly what the SEC has in mind, but I'm sure they're concerned in the sense that they want to ensure that the tokens that they're creating the index for are properly registered. And furthermore, the SEC's mandate, when you look at it, is basically to protect the investing public, right? Both from scammers and from themselves. And I don't know if the SEC feels comfortable, and obviously I can't speak for them, with these tokens that might have come from a poisonous tree being listed in some sort of synthetic product.
Okay. Infrastructure that you resolve. The question is your resolution. Looking at the total presentation, there seem to be many gaps remain to be in the context of infrastructure. So what is the elements of the metric that you say, this is what we totally resolve? Oh, we just do only 10 out of 20, or maybe 30 out of 100. So the question is that we don't really know the touch point, what exactly you resolve, because those are the trading side, but not on technology side. Because you know why? You have your CTO, but the question is that it's not very much focused on the kind of fundamental that is within the ecosystem which doesn't exist until now, and you may still not being aware what the missing link is all about. Thank you.
I would say that the infrastructure is that there are no mechanisms by which to issue, trade, clear, settle, and custody. No, we're creating it all. We've created the issuance component. We have the clearance and settlement component. We're just waiting for the alternative trading system component. And those three components form the regulated infrastructure, which will allow for tokens to have the be transacted, issued, transacted, and processed compliantly. That's the complete security token lifecycle. Mm-hmm. I would say that I'm very proud of our technology, both through our partnerships and through what we've done internally. And that basically, the way it works is that a token that's issued on our blockchain is then executed, is listed on our ATS where transactions are executed to our blockchain. And then a clearance and settlement transaction on the back end is reconciled against the executed trade, which then basically allows you to ensure that there was orderly processing and an efficient market. I hope that answers your question. If you have anything further.
Right. Yep. I see. I think in the interest of time, maybe what we can do is that for this more detailed questions, we can take it after the presentation. For now, we would like to thank Aaron for the very good presentation, as well as our other speakers, Karthik, Mikhail. And our speakers will still be hanging around after this, so if you have any other further questions, do feel free to approach them, and they will be more than happy to take your questions privately. Thank you so much. And thank you everyone for staying for the entire evening.